Welcome, welcome. We are going to take a quick look at three stocks and an ETN that we are watching. So, we're looking at TXMD, NAOV, GME, Gamestop, and FNGD, the Fang Index. So, starting with TXMD, which is a therapeutics pharmaceutical company. They are interesting because they have a long established history and they actually just brought some new products to the market. On top of that, quite interesting, this recent, you see this sort of massive spike in selling volume actually corresponded with a period of share creation by the company. So it was actually, it seemed to get eaten up quite healthily. So that's an interesting sign. I know they needed to raise capital to market some of their products. So if all that goes well, I've got a rather bullish trajectory back to some better valuation numbers for the asset, more similar to the halfway mark of the last decade, around 2015, 2017. Worth noting too on TXMD, the amount of price history that we have. This is a monthly candle chart instead of a weekly candle chart, which we normally look at. It does mean that this is probably a longer term trade if we are to fully double down on it. But let's take a look. I mean, the current value to the sort of the low side of our mid-range price target is quite a healthy return. There is some exposure to, always in this price range, there's exposure to downward moves because of how quickly it eats up cash put into these positions. But this one is interesting. I mean, even a quick move up between these two resistance lines, should we break out and even just test, is an 83% move upward, which is quite significant. And this does, fit just kind of the overall pattern of things that we like to look at. We kind of got this double bottom question. We've got a long history of downtrend, possibly reversing. That's one we like to look at. We'll certainly be keeping our eyes on it and updating it. Next, we go to Nanovibronics, NAOV. So, two things about this before I get into it. One, always a reminder, these videos do not serve as financial advice. I am encouraging nobody to engage in trades of this manner. In fact, this video serves as financial education, financial entertainment. Come watch us chart our strategies and track them over time. We're gonna review all of these and start to see, what plays out and what doesn't, and do that a little bit more publicly. I mean, we'll have some fun. So make sure to subscribe to the channel. But into this chart, it looks like I didn't put much on here, and there's probably a couple things I want to see while we're here. This is one that I have been looking at for a while. Again, nice little double bottom setup. I mean, I don't know that I really want to call it that in such a short time frame, but double test on low resistance. We're moving upward. We've reversed a long multi-year downward trend in overall bullish tendencies, and current to immediate resistance looks to be about 100% return, and then to sort of the distant resistance that I'm targeting. Again, about a 300% return. So this is, I think, another smaller pharmaceutical company. So this could, I mean, it's interesting. You know, we might be starting to see an overall market trend for the industry, and I don't know whether that is interest or investment or what is necessarily succeeding there. But you know, we look here. Let's see. We've got a bottom out March 2020 sort of, and yeah, like a little bit of that sort of second bottom in January. We go to Nanovibronics. What we've got here. See, this is quite different. It looks similar at first, but it's quite different. March 20, August 20. So March 20, we're actually at this other resistance line. So this broke lower than TXMD. So that, yeah, it's so not necessarily correlated, but you know, it's interesting. This end of September or so has seen certain industries kind of rise. All right, and yeah, no ads, thank you. GameStop. So, GameStop. What is going to happen with GameStop? Frankly, I have no idea what's going to happen with GameStop. This is out of control, for a lack of a better word. It's been out of control. This chart actually drew a couple days ago and then did not do anything with it. I think we were, you know, right around here. So we've come down a little bit towards this 143 resistance, but I don't know. We just had a stimulus. This is a meme. At this point, I have all but given up on predicting sort of irrational behavior. I've just started looking for it, I guess. So, you know, if things are to go full irrational, let's see what we might be looking at here. Let's see, so go full irrationality, let's do that, and then let's double it as well. So that's about that. So let's see, let's go price targets here, and sort of parabolic price target at 700. I mean, that would be something else. So we've got these two ranges, and this is why, you know, I'm really not that interested in GameStop at this point, especially at this price. You know, getting GameStop going up to 400, 100% return from where we are. GameStop going up to 700, 250% return. I mean, I think the reason we're not so excited about this is the amount of volume that would be required to make those moves happen. Doesn't seem to be worth the risk. I mean, at $100, at $200, GameStop's got a lot of implied volatility. I mean, I'm sure a lot of people will buy and hold, and they'll probably get roasted a little bit for being realistic about it. I mean, I guess I'm not necessarily. There's no realism here. I will be happily shocked, and should GameStop go up, the rest of the market will, or the markets that I'm heavily concerned about will probably go up too. So, there's no predicting what this is going to do. I put a $704 price target on here? I think it's possible. Do I think GameStop explodes to like $4,000 or $5,000 and destabilizes the finance industry? No, like the brakes will get put on long before that. But I do think 700 is within the realm of possibility should something a little bit more wild go on here. Also a chance that we could get just a sizable third wave, and then a long sort of decline in a couple months. So we do something that looks like we go up here, trace back down, go up here, partial retracement, blurb up here, retest 280, and then just slowly start deflating over time as people lose interest. I mean, that seems like it's likely, but we're gonna keep updating this one maybe every couple of weeks because it is interesting, and more than happy to add quite a few candles in here and see what it does. So last, we are gonna look at one of my favorite things to look at in the last couple months. So alarm bells started going off for me for Tesla back around 8:15. Actually got out majority. I didn't have that much, but 8:15 was the time. It just seemed like the writing was on the wall, and that leads us to the microsectors Fang index. This is a ETN issued by BMO, Bank of Montreal, that is a negative 3x inverse leverage to, I think it is 10 companies. It might be 15 or 20. I'll look that. I can look that up and put it in the comments. The point is, though, is that the Fang index starts in 2018 to index as be a microsector index, and has pretty much only seen tech sector explosion drive it, and specifically Tesla. Like it's overexposed to Tesla. I mean, we'll look at the comparison here. You see we've got a just long decline. But the thing that's really starting to get interesting here is let's start in beginning of 2021. Where are you, 2021? So, we're starting to see potentially we had a moment where these trends reversed and met after a long time of being divergent from the beginning of the year. And what that looked like on the actual price of the note is kind of stunning. Let's take a look here. So here we've got the day setup, and I think right around the end of February is when I started to think this was, I mean, it was down. It's here. It's funny because like we're barely above this, but here I'm looking at this thinking we are down. This banknote, this postmodern stocked instrument is down 99.7% from its inception. It is minus 3x inverse leverage. It is overexposed to Tesla, which I have just sold up, and we are extremely cheap. So, looking at this, what kind of price targets does FNGD have? I mean, it's tough. Like, it's tough to determine. It's not a simple. It doesn't have a simple return. um, and it's not it doesn't function like other assets. So I mean, you have to remember you're trading on an index. Let's see, but let's see some price ranges from when we had moments of extreme movement. We need to get, where is, let's see, what, March 2020. Yeah. So February ends. Local bottom was in. Things went awry, and we shot up 160%. And not too long ago, 57%. And if you go back, there are all sorts of instances of large rises when a couple of these select companies start to falter. Now, you could also, look at other ways of capturing this kind of momentum, but this one is on Robinhood, which makes it interesting, or gives it a unique access too. Oh my god, we've just destroyed this graph. Alright, anyways, so hopefully you found something pretty interesting there. I don't know how many people are actively watching the Fang index. It's an interesting thing to keep your eye on during the day, because it gives you an interesting signal in the morning. But anyways, a couple notes, a little bit longer than normal, so hey, we really appreciate you stopping by to check in on this week update for some stock chart analysis. And other than that, make sure to hit the subscribe button and drop a like. Let us know what you think. Are we right? Are we wrong? What is going to happen?